Welcome back to All About Money. I am Chloe Fong. Joining me today is Wei Yao, Head of Research and Chief Economist for Asia Pacific at Societe Generale. We're going to have more discussions on the Chinese economy that is battered by its latest COVID wave. Welcome to the program, Wei. We know that the country's economy is now paying a heavy price for the stringent COVID measures. And we have also seen that in April, the retail sales and its industrial output dropped to its lowest levels in over 2 years. And according to the Shanghai Automobile Sales Association, not a single car was sold in the city in Shanghai last month. So what do you think that might come next in the second quarter in China following its COVID wave?
Okay, so the problem in April was really that Shanghai was in lockdown throughout the month. And of course, there are also rolling lockdowns, but shorter lockdowns in other cities as well. Now that Shanghai has laid out a trajectory for gradual reopening, actually, I think things should improve from here. Especially, we also see outside of Shanghai, outside of Beijing, the mobility in a lot of cities are improving. So April was really bad in terms of economic situation, but we think that's probably going to be the bottom. We should see a recovery starting from here. The question is actually more about how strong the recovery can be.
All right, and we know that the Shanghai Port is now back at its 90% capacity. How soon do you think it can recover to ease the supply chain disruption, at a full capacity from your point of view?
Yeah, compared to consumption, we're less concerned about the supply and supply chain, because it seems that the Chinese government always have a preference to preserve the supply chain stability. Even during the lockdown in Shanghai, actually Shanghai Port managed to operate, of course, not at full capacity, but at certain capacity. And for the factories, the government set out a white list, and the workers stay in the factory and then continue to produce. So the impact on the supply is there. It's not ideal, but supply is affected less than demand. So we think we can actually see production normalization much ahead of a complete demand recovery.
All right, that's a sort of a positive news. And we also want to bring out about the fact that the property sector is remaining to be bleak, with new home prices in April recording its first monthly fall in 5 months, despite the government incentives. And prices in 70 cities fell 0.2% last month compared with the zero growth in March. So how would you comment the government's response so far? We know that actually on Friday, the banks are also lowering, giving more incentives. But how effective are these measures?
Okay, so the situation with housing is similar to the situation with many other sectors in China, which is the biggest headwind for the economy is the zero COVID policy. If you have, or I should say, to be precise, it's the lockdowns. As long as the lockdowns are in place, the economic easing, a lot of them will not be very effective. That was exactly the situation in April. So lockdown overwhelmed economic easing. But as I mentioned earlier, that we're seeing lockdowns being eased. So gradually we'll see some effect of these easing policies. If we focus on the housing sector, it's clear actually there is a lot of easing already taken place. The local governments have eased a lot of things, and the PBOC are finally more willing to lower the mortgage rates. So usually if you have these easing measures and assuming that lockdowns will not come back on a large scale, housing sales recovery can be expected in the second half. But it's not going to be the challenge is definitely here. The downside risk is definitely here.
Yeah, I'm wondering, what do you think that could be further boost this sector's growth from your point of view? Do you have any suggestions?
I think it is very likely we could see that the PBOC continue to move down the mortgage rates or help the mortgage rates to go down further. And then it's about the confidence. Whether households will regain some of the confidence and come back to the market, that's really the key here. Housing sector is in a very bad shape right now. It actually was already in a pretty bad shape even before the recent lockdowns. So for us, it may take some time really to restore the confidence of the household. And the key thing to watch is really the housing sales in cities that have emerged out of lockdowns, for example, in Shenzhen. If we're seeing some recovery there, then that could be the leading indicator that things can improve.
And also, Wei, how worried are you when it comes to Beijing's ongoing COVID rage? I know that the case level is not as severe as what we have seen in Shanghai over the past months, but there are still kind of risks. And the Beijing government is also doing stringent measures to keep it under control. So if the cases are dragging in the city, in the capital city of Beijing, how would the controls in Beijing affect the country's economy compared with the impact from Shanghai?
Okay, so we can see that the Beijing government tried very hard to avoid a complete lockdown like in Shanghai. So far, however, if you look at the mobility level in Beijing, it's almost as bad as there is a lockdown. But the slight positive here, as you mentioned, is the case numbers are not that elevated, far less elevated as in Shanghai. So hopefully the situation can improve sooner. But indeed, if Beijing is locked down, that's also going to drag the recovery of the whole country. But I think for some of the supply chains, Shanghai is more important, for example, for automobile sector, for some capital goods sector. And if Shanghai can resume production, a lot of the easing can already become more effective.
Right. And actually this week, according to some sources, there's a chance that the U.S. might lift its tariffs on the Chinese goods that are making the everyday goods more expensive for American citizens. And the U.S. Treasury Secretary Janet Yellen also confirmed on Wednesday that she's pressing the Biden administration to remove some tariffs on Chinese imports. The Chinese government, meanwhile, is also adopting a wait-and-see measure. So if the tariffs are removed, how would this affect both of the U.S. and Chinese economy?
Okay. So if the tariffs are removed, it will help. It will help China export sector. Of course, it will mitigate some of the inflation pressure in the U.S. But that's actually not the most important factor here, either for China or the U.S. Because for China, as we saw in 2020 and 21, when tariffs were in place, the export growth actually was very strong because the demand was strong. Right? So ultimately, it's a demand question. Even for the U.S. inflation, it's the demand question. It's less of a tariff problem. But on the margin, there will come in news.
And what do you think the government should do to boost the technology industry's growth? We know that following the regulatory measures, this industry is facing tremendous pressure, and we are seeing the stocks are going up and down. It's very fluctuated. So what do you think the government should do in order to stabilize this industry's growth, as it already mentioned that is playing an important role?
Yeah, so just to clarify, actually, there is a distinction in terms of the different sectors within technology, right? If we think about hardware technology like semiconductor, especially a high-end manufacturing sector, they have been continuously supported by the government, a very solid support in the past few years. It's nonstop. And also similarly for the green transition technology, that's the same. The challenge was in the internet platform, more kind of sort of software companies. The situation was that the government tried to upgrade the regulations here. I think overall for technology sector or any sector in China or private companies, the important thing is to have more predictable regulatory agenda or regulations laid out in place, clear, so companies know what to do, what not to do. Then the rest is really, you need to create a space for companies to innovate. and to improve. So it's about the business environment. Yeah, I think the government kind of now realize, yes, they need to stabilize the business environment. So that's why we're seeing more kind of positive talk and view and rhetoric and stance even on the internet platforms.
And also, Wei, very quick, what is your forecast about the country's full-year economic GDP growth for this year? Because they have made the target of reaching 5.5%. Are you still positive about this goal? And what is your forecast?
Okay, so our forecast is 5%. It is probably above a lot of the other forecasts on the street. The view behind this 5% is that, as you mentioned, the government still sticks to the 5.5. So that means they will have to do more, and it means they are willing to do more. So they will try. We can see that they will try very hard to be actually close to their target. But of course, another factor here is, interestingly, we always see when it comes to GDP data, GDP growth, there is always some upside surprise. So putting everything together, 5 or 4.5, even 4.5 would be a pretty good number for this year, given everything. The important thing here is, how the government balance zero COVID with economic support.
All right, let's see how the situation goes. Thank you very much for your insights and analysis, Wei, the head of research and chief economist for Asia Pacific at Societe Generale. I'm Chloe Fong. Until the next time.